All right, welcome everybody to another episode of the Kwak Brothers, and Daniel is back for this week. And today we have like zero topic ideas. I'm not kidding. We're going this pretty much an impromptu. So Daniel, you missed out last week's podcast, which is okay. We did talk about the dip that happens in property management for the first year. The dip. So what I mean by the dip is that the first year in your rental property, you're gonna be losing money the first year. You're not gonna be cash flowing. Yeah. So what's your take on that?
I mean, it is what it is, right? That's something you have to account for. A lot of people I guess that's more of a thing for like novice / amateur investors that don't know what to kind of expect. You really kind of prepare for the worst. Like my Plano project, we're not going to make money on it for the first 2 years. You know what I mean? Like we're barely going to make money on it for the first 2 years. Maybe like $1,000 a month. You know, operational costs are going to go towards, right? But you also have to accommodate for a lot of things. But year 3, year 2, we're gonna make a lot of money.
Yeah, we're gonna be killing it.
A lot of money.
Right.
It's gonna be like that cartoon when the duck dives into the sea of coins and he's swimming like it's water.
Oh yeah.
You know.
There you go. So Daniel, before we get started, I know actually last week, when I mean by last week, I had a sit down with Ed. I think right now some people are speculating that the market has already crashed.
No.
The seller's market has already crashed.
No, I disagree.
Okay, so what are some of the opinionated, I guess, information that you would give us as far as why you disagree that the market has not crashed?
Well, what are the people who are saying the market has crashed? What are they saying to back it up?
You know, that's what we're finding out right now. We're trying to look for information and evidence to kind of support or not support these speculations. So that's
right.
What we're looking for.
And what are the qualifications, right, of the people who are saying that the market has already crashed?
Well, of course they own properties. Of course, our own mentor is speculating this too. So we're looking for evidence right now.
Well, that's interesting. I had a conversation with. About 3 weeks ago, I had a conversation with my friend Don. He's one of the top real estate attorneys in Chicago. I don't know if he's number one, but he's up there. One of the top real estate attorneys in Chicago. And him and I had a conversation, and him and I kind of both agreed that it's probably not going to happen until about 2020. Now that's when data starts to affect itself, right? When data, things like that, the factors that affect us as real estate investors, like interest rates, default rates, a lot of these things start coming up. But for those people who are saying that the crash has already happened, I think in a way I do agree with those people. In a way it has, but not in the way that the majority public is going to view it. Mm-hmm. If you look at the course of history, a lot of people might even say, "Oh, the 2008 crash started in 1998 because that's when the interest rates started going lower and banks started giving out notes like crazy." Mm-hmm. A lot of people can start saying, "Well, the real crash in 2008 started in 2006 when all the debt started collateralizing, right? When all these hedge funds started merging these notes together. Oh, that's when it started, right? But really, it didn't start until 2008." Right. We call it the March of 2008 because that's when everything fell. And for me, a crash doesn't happen when things start to accumulate. The crash happens when it is the reaction of the accumulation during those years. Mm-hmm. So sure, a lot of things might be happening right now where, we're beginning the stages of that. And I think the reason why people say that is because a lot of people are looking forward to this crash. Right, a lot of people did not see 2008 coming. Right. They really didn't. A very small handful of financial experts really kind of saw that coming. But if you Google crash, a lot of people are saying the crash is coming. It's going to happen in 2018. It's going to happen in 2019. It's going to happen in 2020. People are expecting it. Yeah. So because people are expecting it, a lot more people are more trigger happy to call it out.
Yeah,
I understand.
I think I agree. I agree with that.
Are we excited for it to happen? Dang straight. Absolutely, because we're going to make a lot of money off that crash. But, I get why people are saying that. Mm-hmm. But I think in the majority of the way, I say 65% they're wrong. Mm-hmm. And I don't blame them for the 35%. I really don't. I don't blame them for thinking the way they do at all. But, like I said, we're just seeing trickles of what the downpour is gonna be.
Right.
I mean,
Yeah. So yeah, that's a little insight that we got from Daniel, and I think this is we all got to be vigilant to what's going on in the marketplace right now. We got to be vigilant to the economy. I think this is one of the things that most newbie amateur real estate investors don't understand.
Well, here's the thing I want to point out about that. It's something that they never might understand. Like I study macroeconomics 6 to 8 hours a day, and there are moments where I still don't get it. Right.
Yeah, that's a fair point, right? You know what? I think we have a great topic today that we can cover. I think we can talk about raising money. I think that's the number one problem that everyone's having.
Oh, we don't have time for that.
Well, I mean, we can go hours and hours and hours about raising capital and raising money. But first, before we get to the raising money part, and we're going to be talking about different sources like hard money lenders, private money, and partners.
Let's not go to private money yet. Because I could talk about private money I raised $6 million in private money.
Right.
I raised a lot. I raised millions in private money.
I think we may have a continuation for next week's podcast, but
yeah,
I think
let's talk about hard money.
Let's start that conversation today and this week.
Let's talk about everything but private money.
Yeah,
let's talk about hard money. Let's talk about financial institutions.
Yep. Okay, so before we talk about hard money lending, we want to thank our sponsor, Blinkist, which is an app. Now, you guys are seeing all these books that we're reading in the back here, and I think this is something I mentioned last week's podcast. There it is. So, in fact, we mentioned Outliers last week. So, you guys see all this book, and you guys are wondering how the heck these guys have all the time to read those, right? Well, we just discovered an app that essentially takes an entire book where I just read a Warren Buffett book, Snowball. Yeah, that's a great book. It takes an entire book and essentially they summarize it within 15 minutes of just golden nuggets. So you're only getting the stuff that really matters. Not saying that the remaining stuff doesn't matter, but you want us entrepreneurs, real estate investors, we don't have all the time in the world. We're on the get-go. We're always on the movement, right? So what will help you is that if this app will help you read a book in 15 minutes or less. And what's really great is that you can also listen to it. So if you're working out, if you're out there driving for dollars, or you're commuting, this is going to be a phenomenal tool for you. So how to get this for free for a trial, go to readwith.thekwakbrothers.com. Again, that's readwith.thekwakbrothers.com. In fact, I'll throw it on the screen here. You'll see it. Go download the app. It's absolutely free. You can get a free trial on it. There is a premium subscription where you can pay for unlimited books. That's totally up to you guys, but it is absolutely free for the trial, and you guys can try it out right now, today. Start reading books right away. So let's go and talk about hard money lending situation, hard money lenders, and why Daniel and I are not really a big fan of hard money lenders. There are people that are very successful with it, but I think given the knowledge that we know and the opportunity that we're presented with, we have yet to touch the hard money lender, but we know how to deal with them. We know how to have that conversation with them because we're educated in that. And also we met countless individuals who have used hard money lenders, and we can give you pros and cons about them. So
there are a lot of folks who message us, right? About, hey, I'm a hard money lender. I wanted to see if you're interested. And I don't know, I'm not saying hard money lenders are bad, but I think there is something to be said about a lot of hard money lenders reaching out to us,
right?
When we have all the private capital in the world. So I don't know. It's just it's weird.
So for those who are curious as far as how hard money lending works, in fact, there's a gray area where hard money lending is private lending money, but at the same time, the way that I perceive hard money lending is that they are a professional company, an institution that is solely geared towards lending money to real estate investors, whether to be a short-term flip or a short-term rental property situation. And a lot of these hard money lenders usually focus more so on the property itself. They will look at your credit depending on who the company is, but they will look at more so the property, and they will look at your ability to pay. They'll look at your credit score. So what they'll do is they'll usually fund you on, let's say, 65% of the ARV or 80% of the ARVs. It really depends and varies by the companies out there. And a lot of these guys will charge you points. And what I mean by points is 1 point is basically 1% of the loan. And a lot of people are confused by the interest percentage. Interest is completely different than the point system, right? So when you deal with points, it gets very expensive because that gets added onto the loan itself. So 1 point, let's say we borrow $100,000 from a hard money lender, right? 1 point basically means $1,000 will be
1%.
$1,000 will be thrown into the loan amount, and that's what you would have to pay at the end, plus the interest rate, right? And folks, these interest rates are not low. They're anywhere between 6 to 9%. Sometimes I've seen a hard money lender charge up to 15%, which is very expensive. 12% seems to be the average, but if you have great credit, I've seen we're anywhere between 6 to 9%.
Well,
yeah.
I don't know if people have seen this article, but a lot of these big banks on Wall Street, to give you an example, Morgan Stanley, they just opened up a department for hard money lenders, specifically for flicks and flippers.
Wow. Yeah.
Morgan Stanley.
Well, that just goes to show you hard money lenders are making money, a lot of money, and don't get us wrong. I mean, they're not taking advantage of people. I think they are a great opportunity. If you don't have any sort of private lending money situation or private money investor situation, if hard money lending is the only option to go, but you can still make money, I mean, why not? But I'm just telling you guys right now, Daniel will talk about next week in next week's podcast. There's a much more effective and efficient way to find deals. Let me tell you
why hard money lenders exist, right? And I don't blame them for existing, but here's where they came from. A lot of hard money lenders understood, because when you're a private money lender, your success and your return is totally predicated on the investor's ability to perform.
Right.
My hard money lenders, their money is totally predicated on how I perform and how I put deals together, which is great because I'm awesome. Right?
Sometimes.
Right. Sometimes, yeah. Not all the time, right? But when it comes to putting deals together, I mean, I don't mean to sound cocky or anything, but I put multiple multi-million-dollar deals together, and I've yet to mess up, right? Now, will it happen? Probably, right? And I'll probably look back at this video and say, wow, Daniel, you arrogant piece of, right? But for the long run, that's what I mean. The private hard money lenders totally predicated on the performance of the investor. When you are a hard money lender, it's not as predicated. It really isn't, right? Because not only are you getting money up front for lending, but you're also having a higher interest rate. You also do more of a financial institutional background check. Oftentimes your personal credit can be involved, and a lot of things can be collateralized. When you're looking at a private money situation, the only thing that really protects the private lender, most of the case, is just a promissory note.
Right, and I think I gotta kind of give you guys an explanation as far as private money and hard money goes. They can, in some cases, they can be one and the same thing. What Daniel is referring to, and what we sometimes refer to when we say private money, are like private relationships that we know, that we cultivated.
Right, and Mr. and Mrs. Jones has got $200,000 in their savings account, and they want to get a higher return.
They're not like professional hard money lenders. No. They don't advertise to lend money away.
No.
They don't advertise. They don't call themselves lenders. They're just ordinary folks that
unorthodox investing.
Right, and a lot of these times, a lot of times we don't even treat them as lenders. We treat them as our investors. Right, they actually invest. A lot of times we do equity partnerships, which often makes sense for what we do, but it may not make sense for what you do. So you got to make sure you're kind of understanding and being aware of what you're doing.
My private lenders make bank, or my private lenders make good coin.
So we're specifically talking about hard money lenders.
Yeah.
They have a website, they have a special business phone line they pick up.
Right.
They have staff trained. These are professional lenders. They're not just mom and pop. They have a full-time job and they're just lending on the side. No. I'm talking about they're full-time lenders. This is their profession. So I just want to make sure we're clear about that. So with hard money lenders, they can be fairly expensive, depending on how you look at it. We're not the biggest fan of them just because of that fact. We know we can get better opportunities out there, but to be I guess honest with you guys, we don't like using hard money lenders. But if you are using hard money lenders, here's some criteria that you should be always looking for. A couple things: you want to make sure you're reading their reviews. You're checking them out at Better Business Bureau or some sort of authoritative review site. You also want to get references from past clients who have used the hard money lending source. And also, if they're asking for an upfront fee or very unorthodox or unconventional way of getting your information, such as if they're asking you to email a credit report, that is a huge no-no, right? That sounds like a scam for most. And I think this is where I got to bring the topic out, the whole thing of scam, right? I think there's a lot of scam lenders out there, especially on Facebook, LinkedIn. They like to prey on amateur and new investors that, don't know the process of getting a hard money lending situation.
And they're just, I don't, the new investors, they just want to do a deal.
Right.
They're just so excited.
Yeah.
It's like a teenage boy with his first girlfriend. You know what I mean? But it's just like, to those investors watch, because I know a lot of our audience are investors, and I'm willing to bet, based on my observation, most of those investors watching are probably novice amateurs, maybe haven't done a deal yet, but they're looking to. Don't rush your first deal.
Oh yeah,
do
absolutely.
Never rush your first deal. Cross your I's, dot your T's.
Yeah. Don't ever do a deal just to do a deal. And this is what I like to say. It's like marriage, right? Not getting married is 10,000 times better than getting married to the wrong person, right? Same thing.
Okay, sure.
Yeah, not doing a deal is 10,000 times better than doing a really bad deal. So. But anyways, back to the hard money lending. Be very careful with some of these, so-called lenders out there that are reaching out on Facebook. A lot of times these lenders, they may have licensing. Certain states may require licensing. So check for that. If they're asking for an upfront fee, that's a no-go, right? If they're asking you for information via email or some unconventional way, or their phone or something, right? Also, if they're practicing any sort of discriminatory questions, like what's your gender, right? That actually really shouldn't matter when you're lending. If they're asking you for, let's say, your religious affiliation, that's a red flag right there. Of course, you don't want to be discriminated upon based on your religious practice or whatever you believe in. So be mindful of that, right? There's scams out there that I think we did this conversation with Jesse Goldberg, who's a good friend of ours, who's a private lender, who's also a hard money lender out in California. We had a podcast about that, so go check that out. I think it's episode 3 or 4 that we've done this. So go check that out. I think you guys will appreciate that. So hard money lenders, for us, our opinion, they can get a little expensive. I think they have their use.
Yes, you also have to keep in mind the knowledge difference between hard money lenders and private lenders.
Yes.
Huge knowledge that you just have to approach them the right way.
I think hard money lenders are generally more educated than our
private lenders. By far.
Yeah.
By far.
And a lot of these private hard money lenders will be even more educated than you are. So, of course, you do not want to be outwitted, right, quote unquote, outwitted by hard money lenders. Right. Yeah. So
you don't want to be
this is why education is so important and getting trained and having a mentor figure help you. So speaking of a mentor figure, guys, if you guys are looking for a mentor figure, if you guys are looking for a training, if you guys are looking to work with us, the Kwak Brothers, Daniel and I, we are looking for qualified candidates, and we are always looking for qualified candidates. I don't know. We might one day just stop looking for trainees because our business is so successful. We don't need to expand.
Uncle Sam saying, "I want you."
Yeah.
To join.
So guys, we're looking for quote unquote keyword qualified individuals. Not everyone will qualify. Like Daniel was saying, we get like 0.2 out of 100 people that qualify. So if you guys are interested in working with us, with me and Daniel, go to thekwakbrothers.com/learn. That's thekwakbrothers.com/learn. Fill in your information. We'll reach out to you and we'll further qualify you to see if you're a good fit with us or not. If not, don't worry. Not saying you're a bad or terrible person.
Maybe it's not ready.
Yeah, not the right time.
It's not ready.
So guys, we're gonna wrap it up with today's podcast. We're ending here with bit of a I guess to be continued for next week. Next week we're gonna be talking about private money and how Daniel and I have raised over $3 million. Daniel says $6 million. I stopped counting after 3.
I raised $6 million.
To me, after $3 million, it was like, okay, we're done here. We're just, we're not counting anymore.
Let me say, he helped me raise the first $1 million.
There we go. So, guys, thank you so much for tuning in to our podcast episode. This has been episode 10. Tune in for next week's episode where Daniel is going to continue this conversation for private money, and we'll be right back with you guys. And if you guys are watching this on YouTube, please do subscribe as we want to continue providing you guys with some more real estate investing information. Click like on this video. Go ahead and ask us any questions if you have any. Guys, thank you so much for tuning in. Love you all. Appreciate you.
Let's do this. Comment down below because we want to hear these stories so we can give you a shout out.
We got 5
Comment
seconds.
down below your horror stories or good stories about lending. Go.
All right, see you guys.